Hello friends, welcome to MAT Accounting for Joint Stock Company, and in this we are going to discuss in this video interest on debentures. Let's see little detail. Interest on debentures. When a company issues debentures, the company has to pay interest to debenture holder at fixed percentage periodically until debentures redeemed. Interest calculated on the face value of debentures. The company must pay interest whether the company earn profit or loss. According to income tax, a company must deduct TDS tax deducted at sources at prescribed rate. So debenture is a long-term loan collected by the company from the common public as well as institutions, and the company should pay interest periodically to the debenture holder till redeemed. So till maturity period the company should pay the interest. Interest the company should calculate always on the face value. Company can issue debentures at par, premium and discount, but interest always the company should calculate on the face value only. The company must pay the interest whether the company earn profit neither loss. They should pay the interest to the debenture holder, and also company should deduct TDS before paying interest to the debenture holder at a prescribed rate. Let's see one example question. Idea Company Limited issued 2000 10% debentures of ₹100 each on 1st April 2015 at par and redeemable at par. Prepare the journal entries relating to issue of debentures for 2016 and 2017, assuming that interest paid annually on 31st March every year, tax deducted at sources is 10%. The company follows a financial year. In this question, a company issued 2000 10% debentures of ₹100 each. The number of debentures issued by the company 2000, and the rate per debenture is 100. Total 2000 into 100, 2 lakh rupees company going to rise from the public as a loan. On 1st April the company issued at par. That means whatever the face value, the same face value company going to collect from the public as a loan, and the company going to redeem at par. Actually we have a 6 terms and conditions of issue. I explained in the previous video. I took a first term in this question, and with this term we need to prepare the journal for issue, and also we need to record the interest. Also we need to record tax. Let's see the journal entry. Journal entries in the books of Idea Limited, and we should write the format of date, particulars, LF, debit, credit. The company issued debenture on 1/4/2015. We know well that the debenture holder should deposit the amount into the company's bank account. So the bank received amount from the debenture holder, so we need to debit the bank, and we need to credit to 10% debenture application and allotment account 2 lakh. Here we debited bank according to modern approach. When bank balance increase we need to debit it because bank come under asset category. So when asset increase we need to debit the bank, and we need to credit application and allotment. Also we should write the narration being 10% debenture application and allotment money received. After receiving the money from the debenture holder, and the same we need to transfer to debenture account. So the same date 1/4/2015, 10% debenture application and allotment account debit to 10% debenture 2 lakh. Here we credited the debenture. Debenture is a long-term loan collected by the company. Loan is a liability for the company because the company need to repay in a future, which is payable in a future is a liability for the company. So when liability increase according to modern approach we need to credit it, and we should write the narration being 10% debenture application and allotment money transferred to debenture account. So after transferring to debenture account, now after 12 months the company need to pay the interest to the debenture holder. So 31/3/2016 a company need to pay the interest to the debenture holder, so we need to debit the interest. So debenture interest account, total amount collected by the company is in 2 lakh, and the rate of interest is in 10%. So 2 lakh into 10 by 100, total 20,000 rupees a company need to pay the interest. So interest is an expenses. So according to modern approach, when expenses increase, we need to debit it. And this interest the company going to pay a debenture holder, and as well as the part of money to the tax. So to debenture holder account, 20,000 into 90 divided by 100, because TDS is in 10%. So the debenture holder will get only a 90% from the company. So 20,000 into 90%, 18,000. The total interest is in 20,000. Out of 20,000, the debenture holder will get only 90%. So 20,000 into 90%, it is 18,000 rupees the debenture holder will get. The balance amount the company should pay to tax. So to income tax payable account, 20,000 into 10%, it is in 2,000. This actually due. So being interest on debenture and TDS due. So after due, the company will pay the interest and the company will pay the tax. So same date 31/3/2016, debenture holder account debit 18,000 to bank account 18,000. When a company paying interest to the debenture holder, the bank balance decrease. So when bank balance decrease in a company, so we need to credit it. Bank come under asset category. When asset increase, we need to debit it, and when asset decrease, we need to credit it according to modern approach. So here the debenture holder is a receiver, so we need to debit the debenture holder and we need to credit the bank. So being interest paid on debentures. So after paying interest 18,000, now company will pay tax to the government. So 31/3/2016, income tax payable account debit 2,000 to bank account 2,000. When company pays TDS, so we need to credit the bank because bank balance decrease. So after paying interest as well as tax, the interest company need to transfer to statement of profit and loss account. 31/3/2016, statement of profit and loss account debit to interest on debenture account 20,000, 20,000. So the interest we need to transfer to profit and loss account. So we should write the narration being interest on debentures transferred to statement of profit and loss account. So every year at the time of paying interest, totally 4 entries compulsory will come. The first entry at the time of paying interest is an interest due. Then second entry for paying interest to the debenture holder, and third entry paying income tax to the government, and the fourth entry the interest we need to transfer to statement of profit and loss account. And the second year also we need to follow the same procedure. 31/3/2017, now end of the second year, company need to pay interest. Total 2 lakh into 10%. So debenture interest account 2 lakh into 10 by 100, total 20,000 rupees company need to pay the interest to the debenture holder. Out of this 20%, debenture holder will get only 90%, and the company will pay as a TDS 10%. And we should write to debenture holder account total interest 20,000, which we calculated here. So 20,000 into 90% to the debenture holder 18,000, and to income tax payable 20,000 into balance 10% for the tax. So 2,000 rupees. This is being interest on debenture and TDS due. This due second year the company will pay to the debenture holder. Again the same procedure. 31/3/2017, debenture holder account debit 18,000 to bank account 18,000. At the time of paying interest, the bank balance of the company decreased, so we credited, and the debenture holder is a receiver, that is the reason we debited, being interest on debenture paid. Then after paying interest on debenture, the company will pay the tax to the government as a TDS. 31/3/2017, income tax payable account debit 2,000 to bank account 2,000. This is paying TDS to the government, being tax deducted at sources paid. Here also bank balance decrease. We know well when bank balance decrease we need to credit it, and income tax authority is a receiver of 2,000 rupees, so we need to debit the income tax payable. And the fourth entry, we need to transfer entire interest to the statement of profit and loss account. We need to debit entire 20,000 interest into the statement of profit and loss account. So 31/3/2017 statement of profit and loss account debit 20,000 to interest on debenture 20,000, being interest on debenture transferred to statement of profit and loss account. So till maturity period the company will go ahead with the same process. 4 entries it will appear every end of the year till maturity period. The same interest amount also will appear. Suppose in future if any changes comes in the rate of interest, the amount of interest will change but the entries remain same. Hope you understood this particular concept. If you like this video, please subscribe my channel. Thank you.